Like you said, like if we're looking at the DXY, um, it could want to, like when news come out, it could want to just like fake the people out like it's going to go lower, right?
Yeah.
And then sweep the lows to just trade higher because everything's manipulated. They want you to think. They want you to think what they're doing, is the real move when the real move doesn't really be coming until like a couple minutes afterwards. You know what I'm saying? But if we're looking at this, we're just analyzing the DXY. See a DXY up there. If you're analyzing the DXY, you can see that it's on a downwards trend. But you have this spike right here, which kind of gives me like, it wants to change structure a little bit. It wants to like go up, like this huge movement. It wants to go up, but it's still something pushing it down. So maybe once it takes out this money right here, which it looks like is ready to start doing, it's going to start trading higher after it takes out that money because it's just like a boost in the market to give it like a boost, basically. So we're just looking at that and comparing it on the euro, which this would be, it's kind of far, I think. It's 25 pips away, which is not, too far. You still got an hour to move, so it could reach up there. But I would be wanting to look at the 50% of the imbalance because the 50% is a vital zone that price could play off of. So that's why I keep it in interest.
Look, where are you getting this idea of this 50? Like, cause like where is this 50? Is this something we can
50%
look
of
at?
the imbalance. So the imbalance is on the 4-hour. So you understand what an imbalance is. I think I showed you this one yesterday.
That's the one that when
It's
the
an
banks be
imbalance in
trading.
the market right there.
Okay.
That
It's
means
like
a
when the
straight
bank got
line.
in then and made this shit move a certain way, right?
Yeah, the banks push the market up to push it down and left an imbalance in the market. So that means they have to come back to balance price back out. So we're just looking to where we are now. It has created all this money in the market because it hasn't came up above that point yet, right? See all that?
Okay.
So that would be a nice opportunity for us to play off of that zone. We use the Fibonacci, which you just seen, to mark up the 50%. I was looking for a short. Bam. I put on the 50%. I'll put my stop above the imbalance. I give myself 20 pips. 20 pips is cool. And I would be going for 60 pips, which is a 1 to 3 trade, which I'll just target that low right there. And
Meaning
that's how
when you went down there to target the low, what does that mean?
target the low. So if you understand that when money's swept, they like to target the next area. They like to go to wherever the next money is sitting. So if they took money on the upside, then where's the money on the downside? That makes sense? And, you have money sitting below these lows as well. And you got money sitting below here.
All right, check this out. What you mean you got money sitting? What you mean you got money sitting below there? What you mean?
Because this is where people brought the market at. People brought the market.
Oh, you can check. Okay, I get what you're looking at. I get what you're looking at.
People brought the market
that's
here.
the low peak.
People brought the market here.
Mm-hmm.
People brought
the
the
other
market
green line that you got too, right?
here.
Yeah.
So it's on the upwards. You can see where it's kind of stair-stepping its way up.
Okay.
So the banks know that stop losses are below this because guess what? People brought the market, like I said, they brought the market there, and put their stop I don't know why it's a different color. It's weird. It's supposed to be the same color. Put their stop. You know, they brought it here. They brought it right there at the green line. So it's
Put
some
they
stop
stop loss a
sitting.
little bit
Yeah,
below that
stop.
jump.
Right. So I'm gonna just do this to represent the money that's sitting right there. Right. People brought the market here. Right. And it's still riding it up. Like all these still riding it up. The stop loss is somewhere in this area. You know what I'm saying? Which means money's sitting down here. And you have, you know, another area where they brought the market at down here. You know what I'm saying? To buy it up still. So that means it's money sitting below there, below this area, which represent that another green.
Okay.
So you just show you that mostly buyers been in the market, and their stop losses is money sitting above in these green boxes, in these green circles. And it's more money sitting right, because the more money they build up, like they create the range. Remember I said they create the range and push price sideways?
Mm-hmm. That's what's going on over there since that, I see. That's what's been going on since that imbalance.
Right, exactly. That's what's been going on since the imbalance. So right now we just looking at the range that it's in right now. This is 4 hour. It already broke. So if we're just looking at the range, and let me not use that. Let me use the fib. So I'm gonna use the high, which is all the way over here, right, to mark up the top of the range.
Mm-hmm.
And I'm gonna put the low right here, which is the new low of the bottom of the range. Right there. So remember we break it down into discount and premium price. Let me delete some of these circles first before I get too messy.
You doing this with a computer, right?
It's my iPad. So premium and discount price, right? This is your premium. This is your discount. You're just breaking up the range into 50%.
Just splitting it down. Okay. Okay.
50 and 50. Right. Make that blue. So you have an imbalance right there, and you see over here, you got your levels, right? So any of these levels is where you could be selling at, because this is premium price. So you can sell at this level, you can sell at this level. You see it bounced off this 81 to 78 and gave you, this nice little push down. See this one? See the 78 level?
Mm-hmm.
You see it's getting reaction off the 78 right now as well. So it could push up a little bit more to the 88 or in between the 88, the 78 and the 88, just to start pushing lower, to maybe take out some more lows before it pushes up higher. Does that make sense?
Yeah.
Or it could just push up, take out some more highs and then just start trading all the way down. But this is where you want to look at sales. This is on a daily time frame, it's a little bigger. So just understanding where you are in the range, and based on your buying or selling. If this was flip-flop, right? If that was the high and this is the low, then this would be the discount area that, look how it bounced off the 61 to go higher. You see what I'm
And
saying?
what time frame are we looking at here?
The
What time
daily.
interval?
This is a daily range.
Daily. Okay.
This is a daily range. Just discovering, like, when I'm looking for buyers or sells. You could be looking for buys when it comes down below the 50%, or you're looking for sells when it comes above the 50%. I'm gonna switch it again so you kind of understand what I'm saying. One more time.
The time frame on this varies a lot different than the binary options, right? Like it's more longer term than that. Quick.
I think binary uses the same time frames, but it just looks a little bit more crazier because it's high frequency trading, so it just moves a lot quicker.
Yeah, it'd be more like in minute intervals and stuff like that versus the
Yeah, exactly.
hours.
They don't really have dailies and all that stuff. You usually got 1 minute, 3 minute, 5 minute, 15 minute, and a 30 minute.
Yeah, so this is a little different because this is about staying. You know what I'm saying? Staying until.
Mm-hmm.
Okay, that's what I'm noticing.
So, we could target these lows here, which would be 65 pips, which isn't bad. Because that
Look,
is
explain your thought process behind that 65 pips, which isn't bad. Like what?
because
How
we
come
always
it's not?
go for the 1 to 3 trades. So that means we're risking, this is our stop loss,
Okay.
right? This is where it's going to take us out of the market if it goes beyond this point. Just thinking about, if you just think about, market structure and how the market moves, if it breaks a high, that we don't want it to go above, I don't want it to go above this imbalance, right? I want it to play off the 50% of that imbalance. As you can see, I want it to feel the imbalance to just go lower, because that's what happens when imbalances are usually filled. Like, for instance, you can see an imbalance here in the market, and it filled the imbalance just to trade higher.
Okay.
I'm gonna delete all this stuff. So see the imbalance right there. See, this is the initial imbalance. I just dragged it over. This is the initial imbalance, because there's nothing but a straight line there. It's nothing but a straight line there, right? That's an imbalance that the market has to fill up. And what did the market do? It came right back into the imbalance, filled it up, and started trading higher. So looking at a long position, you can look at the 50% of this imbalance. It's the same thing we're doing up there. How do we measure the 50%? We use the Fibonacci retracement. Measure the imbalance from top to bottom. Mark the 50% with the horizontal ray or whatever you want to use. Bam. Right? Delete the fib. You got to align what the 50% is. You put a long position, which is a buy. You put your stop below the low. Probably can get a better low than that. Let me see. I can use this low right here. This is a little bit over 28 pips. That'll be going for a 1 to 3 trade, which is right there, which is 85 pips, and it would have gave it to me. That'll be my position right here. And I would have won that trade. Why? Because I played the 50% of the imbalance, right? I put my low below the imbalance, put it at that stop over here. See that stop? See that low I mean?
Mm-hmm.
Put it at that last low, right? And I go for a 1 to 3 trade. You see that number in the middle says 2.92 risk to reward. I'm looking for that to be a 3. So that means every single time that I lose, only losing 1%. Every time that I gain, I'm gaining 3%. So that means I can lose 7 times and only win 3 and still be profitable.
I like that. I like that. Okay. So that's because you set your bottom stop loss at a certain level and then you set your top
right,
stop loss.
Right. Because it's a stop loss and a take profit. You always, if your stop loss is 10 pips, then you always got to go for 30.
Or to take profit.
Take profit, right? Because you have to make 3 times as much as you're risking. If not, you're not going to see consistent profitability.
I like that.
So,
okay.
That's pretty much that with the imbalances. I'm gonna get into the pips, right? I don't think we went over pips, but that was a nice move right there. That is very textbook right there. I mean, it's still going up, to be honest. We would have been up 160 pips if you kept that position, which could be $160. It can be, $1,600. It can be $16,000. Whatever. But that's a whole nother story. So we're going to get into pips and how the market moves. So basically all these numbers on the side, is where current price, where price is near. Like if I was all the way up here, then it'd be, in the 25s and all that shit. But see where I'm at, where price is currently at, is near the 1800s, the 1900s, and the 20,000 or 20,000. If you always look to the right of where current price is at, you're always going to get that number right there. And that white line is basically where current price is. And you can see
1.19, 138, 137.
137. Yep, and it just fluctuates. I mean, you can just see it fluctuating. That's where current price is at. You see right below the number is the time. And the time is basically how much time you have left to form that candle, depending on what time frame you're in. So, of course, it says 26 seconds left to form a candle. That's because I'm on the minute time frame. So if I go to the 5 minute, it's going to say 3 minutes to finish that candle. That makes sense?
Yeah, I got you.
So it's going to take 5 minutes to form this one candle, and it counts it down for you. So that means that, 2:25, this candle would be formed. Same thing for this 30 minute. This 30 minute has 7 minutes left. So that means that, 2:30, this candle will be formed. And it goes, the same thing goes for, the hour, same thing goes for the 4 hours. You see, it has 37 minutes left. You with me? So that's how you kind of measure or identify how much time's left to form a candle and where price is currently at. So I'm going to explain how the pipettes work. The pips work. So right now we're close to this. What the fuck? Right now we're close to the 1900, right? So 119. Why is it filling it in? What the fuck? It's weird. Right? We're near the 1900 level, right? So this right here is a pipette. Oh, pipette.
Hold on. What's the difference?
Pipette is basically like a tenth of basically like let me see. So say you got, $1, right?
Yeah.
That would be
A
the
dime.
20 cents in the
Okay.
dollar.
Okay. And you can actually view that shit? Like you can actually view that small of a
This is a pip, right? So say this thing goes up to 1, 9, 10, 0, right? So that means the market went up plus 10 pips. Get it? Because this number right here changed. So what I like to do is break them up into two numbers, 19, 10.
you going off of that number up there, that 1.19135?
Yeah, that's basically where price is at right now. I'm just using the 1900 level as an even level for you to,
I got you. Okay.
to can you see
No,
this
no, yo, I can't see none of that. That color, you use like some purple or some shit.
this
Nah,
bad color, my bad.
none of that.
Is that better?
It ain't changed.
Can you see that better?
Oh yeah, yeah. I can, yeah. That works. But all
Alright,
that purple shit, I can't view none of that.
my
Even the
bad.
arrow. I just now peeped that was an arrow.
I couldn't even it looks clear on my screen. I didn't know. I'm looking on the other screen now and see it's not as clear. All right, so I'm gonna do it to it one more. Say it one more time. So
All
we're
right.
just looking at. Why is it yellow? Man, if we're just looking at.
All right, that works.
All right, one more time. Okay. Shit better be right. All right, so we're just looking at right here,
There we
right?
go. Yeah.
1900. 1900,
Mm-hmm.
right? That we can use it as a major level or a whole level.
All right.
But I'm gonna go back into the pipette. So we got 19,000. You got this last number, which is a pipette. You have this number, which is a pip. So what I like to do is break it down into like two numbers. So when I say 1910, it's at 1900, right? So if it goes up to 1, 9, 10, 0, that means the market went up by 10 pips.
Okay.
That's sloppy. Market went up by 10 pips because 1910 versus 1900. So if I was at, like for instance, where price is at now, 19.9125. You know what I'm saying? The 5 would be the pipette.
Pipette. Okay, gotcha.
So it's just a smaller interval. So once this goes up to 9 and it hits 10, this number changes to a 13. That number changed to a 13, so it'd be 1913 because the pipette went up to the whole next number, which makes 13. So it's like, I got $12.50. If I add another 50 cents to that, it just give me $13.
The cents is the pips. The dollars.
The cents is the pipettes.
The pipettes. Yeah.
Mm-hmm.
Okay.
So you can just, if I was to go up, let me delete some of this again. Can I delete some of this?
Yeah. Hold on. Wait. All right, yeah. That way I got it in case I need to see it.
So if I go from 19,000 to 120,000, how many pips would that be? Remember, this is a pipette. This is a pip. So that double box 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Then this will be the next numbers that goes up. So if this is plus 10, this would be the plus 100 basically, and this would be like the 1,000.
Alright, so
if it goes up to the 20, it's basically up to 100 pips.
100.
It went from 900 to 20. You know what I'm saying? It went to the next whole number. It went from 1900 to 20,000 to 20.
So it's 100 pips, not 1,000 pips, right?
Not 1,000 pips, because that last number, if it went up from 11000 to 12000, that's 1,000 pips.
That's 1,000 pips. I got you.
That's 1,000 pips.
I got you.
But it's already at 1900. So say if I was at 1950, right? 1950. You don't even gotta remember the pip if you don't want to. This is the pip. You 50 pips, right? So if you was to go up to from 1950 to 2,000, 20,000, how many pips would that be?
500.
No, because don't look at this last number.
Oh, damn. Oh, my fault. 50.
Right.
Yeah,
so
okay.
50 pips.
Gotcha.
And these candles are filled with pips. So if this candle opened at 1882, right? And then it closed at 1895. 1895. That means price went up by 13 pips in that candle.
And that incident, you're not counting the pipette, because the pipette would be the next number, right?
I mean, you can just always round it off if you want. It would be the next number. It'd be this 0.
All right, cool. I got you.
But it's still the same thing, because you're still looking at
Those two numbers.
Right. Just remember, it's always one. Wait, we just counted decimal places. 1, 2, 3, 4, 5. With the 1 at the end, it's always going to be a 1. Right. This last one is the pipette. Then these next two, you can count in tens of pips. So if it just goes up to a 1 right here, that's 10 pips. If it goes up to a 5, that's 50 pips. If this goes up, to a 1, then that's 100 pips.
Hey, where you? Hold on. Where you at? I can't. Hey, what go up?
So you're looking at the decimal places.
I see you now. No, I see you now. I ain't see you up there. I see you now. I can see you writing up there
The
first.
decimal places.
Gotcha.
So it's always going to be 1, 2, 3, 4, 5. And the fifth one is always going to be that pipette.
Gotcha. That's the one that's moving the most.
Right, because it's the smallest increment.
Yeah.
The 3 and 4, you can count that as your tens. Like, this is considered your pip right there. The fourth one, once this goes up to 1, that's 1 pip. Once this goes up to 1, that's 10 pips. Once this goes up to 1, that's 100 pips. Once this goes up to 1, that's 1,000 pips.
Okay.
That makes sense?
Yeah.
All right. So you understand what a pip is?
Yeah.
You understand how to read the numbers on the side?
Yeah.
All right.
1, 10, 100,000. Yeah.
So next thing we're going to do is talk about the lot sizes. So lot sizes are basically, when you're thinking of a pip, right? Well, you think of your account in trading, you're letting the bank and you're letting the markets into your account. But how much is the question, and lot sizes depend on how much you're letting the bank inside of your account. So when you go to your MetaTrader app, you're going to have a 0.01, and that's going to equal for 10 cents every time the market goes up by 1 pip. That's your lot. This is lot size. So then, like, say you have the lot size of 0.010, right? That means every time the market goes up 1 pip, it's going to be equal to $1. So then after that, this course this can go up to 2, 3, 4, 5. With the zeros behind it. The 5 would be $5 a pip. I mean, every time the market goes up, you'll be getting $5 for 1 pip. Then you go on to the standard lot size. That's a 1.00. So that means every single time the market goes up, you will get $10 for 1 pip.
Okay. And that's something that you adjust that yourself, right?
You adjust it yourself, and this is how you're going to be. This is how you're going to dictate how much you're risking in your account.
Okay.
Because if you understand that, if you have $100,000 account, matter of fact, I just do something a little bit more reasonable. If you just have $1,000 account, right, and your trade, you risk negative 1% to gain 3%, right? So if you're looking at $1,000 account, you have to make your lot size what would be 1% of $1,000, which is $10. So that means you'll be able to put a lot size of $1 if the risk is 10 pips. Why? Because you're only risking $10 of your account, which is 1%. So say I'm risking 20 pips, right? And I got $1,000 in my account, right? So that means my lot size will have to be a 0.05.
50 cents per pip for 20 pips.
For 20 pips, because it still equals up to $10, risk to gain $30. That makes sense?
Yeah.
I had to adjust my lot size because my stop loss was bigger. My stop loss. So I had to do, I had to change my lot size.
Okay.
That makes sense?
Yeah.
So this is when we're saying, this is when we trade with 1 to 3 trades, because we understand that we can take several losses and still be profitable. Because if we're going if I'm risking 20 pips here, we were just talking about, if I'm risking 20 pips here, I have to go for at least 60 pips. I have to go for at least 60 pips. Why? Because it's a 1 to 3 trade. So say if I'm taking 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades, I got a loss, a W, a loss, a W, a loss, a loss, a loss, a W, a loss, and a loss. How many losses is that? 1, 2, 3, 4, 5, 6, 7. So I got 7 losses, 7 L's. And I got 3 wins. But because we do a 3-to-1 trade, that 7 losses put me down 7%, right? But the 3 wins put me up 9%. So the last thing we're going to talk about are buy limits and sell limits. And basically where buy limits are, sell limits are where you're placing an order in the market for your order to get filled, for it to for you to put you in the market, for either to hit your TP or hit your stop loss. Of course, we wanted to hit our stop our TP. So for instance, I have a sell limit, place, and every time I set a sell limit, this is how it's going to be. You got your entry to the right, right? You got your stop to the right. What is this? Then you have your TP to the right. So
You setting it up like that because this time you selling, right?
This time we selling.
All
So
right.
anytime we sell, our stop loss is going to be above our entry.
Gotcha.
So think of this thing like two boxes, right? Why is that purple line there? Hold on. Trying to figure out why that purple line was there. I don't know what's got a line somewhere on here, but I'll find it later. But the reason why our stop loss is above our entry because we're selling the market. And basically a stop loss is going to take us out of the market. Stop loss is going to take us out of the market because if it goes beyond this point, so for instance, this is what we're looking for the market to do once it comes up to this imbalance. We want it to travel up, put on our entry, break lower, travel down. That makes sense? So put us in the position, to travel lower. That means we're in the market. We're in the market here.
Okay.
How are you gonna be able to identify what's the entry? Is always the box, the line split into two boxes. How you gonna always identify the stop loss? It's always going to be smaller than the take profit because we always go for 3-to-1 trades. So this one box is always going to equal up to
Some
this one
portion
box,
smaller than that box.
right? This box will always equal up to 3 of these.
Gotcha.
Because we always go for a 1-to-3 trade. So
Gotcha.
what is the stop loss for? So stop loss, for instance, if the market was to come up and do that, it would take us out right here.
So we
Why?
wouldn't keep
Because
on losing.
it could keep going up. So we don't want to be in the market anymore. We're expecting it to continue going up, at that point. So we don't want to be in the market anymore.
Mm-hmm.
So we're expecting to go up, put us in our entry, and take us out TP. That's when we make money. That's when it take us out of the trade, and we're done. We're made our money. We're done for the day. We don't have to do anything else. Just look at your next trade, or, analyze what happened. So for a buy limit, it would be, so you got long and short, right? Long position, of course, is to go long, go up. Short position is to go short, short the market, sell. So if it was a long position, bam, that would be our long position. You can see it tells you the numbers on the side. You don't even have to do the hard work. Tells you the numbers, where the entry at, where the stop loss at, where to take profit at. The reason this is a buy limit, because your entry is here, your stop loss is here. So what we expect the market to do in the buy limit is, if it's traveling down, put us in the market to go higher, to take profit.
Okay. All right.
Selling it was the opposite.
All right. And you moved all the way over there like that, right? Because is that like how far in the future you expecting that to do that? That's why you moved
No, I
way
was
over
just
there?
showing you the definition of a buy limit.
Oh, all right. So your position on that joint ain't really like on the
No, it's
bottom.
not really going off of anything. It's just showing you a buy limit.
All right, cool.
Because I don't really have a buy limit, and like I'm not looking for a buy right now, so I couldn't really give you an example of a buy limit. I mean, I can. I think I'm pretty sure I got one in here somewhere. I think it's a buy limit. Oh yeah, I was looking for that. I mean, that's gonna take a while to get there though. This is a buy limit. This is an example of a buy limit, and that played out beautifully. Why? Because this one wick put me in the entry.
That long ass wick right there.
See how it came down, wicked in my entry.
Mm-hmm.
To just trade higher, and it gave me my 1 to 3 trade. It's a 5-1.
You got a lot. Okay, it's like you. Okay, I get it. I think I see. So you was buying on that one,
right?
Okay.
Because I seen the market ready to trend higher. So
did you eat from the bottom of that wick all the way to the top of your?
This is where I got into the market. I think it was off. It was off the 15-minute, I believe. Yeah, it was off the 15-minute because I played off of this last candle right here. I play off of that last candle right there because they pushed the market up to leave an imbalance right there. Mm-hmm. So I knew they had to come back. They had to come back to that candle
right there
to push higher.
Boom. Hey, so
this is literally no drawdown. And drawdown basically when your account goes in negative. If you had a entry here and it started going down in your stop loss, this would be red. Your phone would be red. You'll be in drawdown. So the fact that this came into the entry, poked in here with no drawdown at all, just poked, whoop, and just like instantly put you in blue. Because it's like, your entry is at, 22.4. This wick came down to 21. To 21.4. So you got 1 pip. They put you in at 1 pip. It went down 1 pip of drawdown. So that's like if I had a standard lot size, it went down $10 because it went down 1 pip. Then after that, it just went up, 100s, 200s, 300s, 400s, just up and up from there. That's an example of a buy limit. Basically what I was saying. I don't know where it went. Oh yeah, right there. It was just a better explanation of, what was going on here. Let me delete this. And that's pretty much all I really got for the day. I'm gonna leave it at that. That way you know how to place a trade now. And I'll call you, after this, and we can set up the MetaTrader for you so you can actually start putting in trades.
All right. That's a bet.
And that's just on a demo account, of course, so you can get the hang of it. Like for instance, remember that I just showed you, it just pushed up and it left the imbalance in the market. And this is the last down candle. So when it pushes up like that, we're expecting it to come back down to that candle and just, and that's exactly what it did.
Okay, yeah, okay.
It has to fill in this imbalance. just like this imbalance.
Feeling it. Okay, yeah.
You know what I'm saying? So it just doesn't doing the same thing over again. So